To the Flow Tracy Money Audio Commentary. This is Owen Tracy recording. It's 1:58 p.m. that is Central Time, and today is October 10th. Today being Friday, it's the big picture, long-term audio and video for the various different asset classes. And certainly we have plenty to talk about this week because we've had a significant drawdown in oil prices. Stocks have been weak today, but then not so weak that it's causing panic. The private equity sector has broken lower. Then we have a significant contraction in government bond yields, and that's a turn up for the books. And then we've had some quite significant volatility in precious metals this week. Then we have the geopolitical news, where you have the prospect of a more durable ceasefire and potentially even a peace agreement in Gaza. Then there's the downward pressure on oil, putting pressure on Russia's finances, which I think is primarily aimed at bringing them to the negotiation table. And then on the other side, you have President Trump saying, well, he doesn't see any need to meet up with President Xi, and that there's the possibility that he will increase tariffs even further. Then, of course, there's this whole question around artificial intelligence and the massive investments that are being poured into it. There's also, I think, a rather interesting question about the difference between the best performing assets this year and those that have been performing worst. And since we're in the last quarter of the year, we're going to see that there will certainly be the potential, at least, for some tax harvest selling. And it would really depend then on what positions people have losses in that they might want to take a write-off on. And then we've also had quite a bit of variability in Bitcoin prices, but they're still holding the move above the 120,000 level. We did have a powerful move higher earlier on this week in some of the Bitcoin miners, and I think it's going to be worth just taking some time to think about what's going on with that as well. Whereas then we can also think about what's going on in Japan, where the government is looking under pressure. The yen weakened significantly in the early part of this week before steadying up on Friday. And there's obviously then this continued upward trend in JGB yields, which is troubling from the perspective of the fiscal situation. You have the socialists in France saying that they're willing to tank any government that is put together. They're really seeing blood in the water, and they want to force a presidential election in France. Then in Brazil, you have Lula da Silva blatantly attempting to buy the next election and already saying that he's going to support the compression in prices for cooking oil, then also creating a new lending program to give affordable rates for buyers of property. So all of that is significant on the fiscal side, and the central bank has been very clear that they're not going to tolerate that kind of behavior. So we can anticipate that interest rates will be